So Tesla is now a blue chip stock. What do you think about that? This is Randy Kirk, and if this content, I get so tired of saying that over and over again. But for those of you who are new and you've never liked and you've never subscribed, this would be a great time to do that. Well, this has been a long, hard fight. And boy, do we have to thank Alexandra Mers for all of her hard work in getting these rating agencies to change Tesla's rating from junk to investable. Thank you, Alexandra. Really, really, really. She's been on our show. She's a great benefit to the community, and we just can't thank her enough. But what does this really mean? And was it the reason why the stock went up so crazy today? Well, yes and yes, or something like that. Yes, I believe that the stock moved today because of the rating change. What it basically says is that institutional buyers can now purchase Tesla as a blue chip stock that has been approved by Moody's, and they may not have felt like they could buy it up until then. So that might have meant that there were some people that have been itching to buy it, some institutions that have been thinking that it's really underpriced at this point, which it definitely is, who've been just couldn't wait, and now they have the opportunity to buy. So that resulted in like a 7% increase today during regular hours, and it's down just a tad after hours. But what do we think this might mean long term? Well, that plays into a narrative that I've been discussing now for a couple of weeks. And that is the market right now is trying to find homes for cash because there's more cash on the sidelines than there's ever been before. So there's all this cash, and they're chasing 3.5% 10-year bonds and 4.1% 2-year bonds. They're chasing all of this easy money, but it's not a very good return. Most of these institutions would like to get way more than that in terms of return if they're going to encourage you and me to invest in their funds and other kinds of instruments. So they're looking for ways. What are the ways? Well, Tesla clearly is the only large cap stock that is claiming they're going to grow 50% per year in total revenues and grow more than 50% a year in profits for year after year into the future. There's no other company on earth like it. There never has been. Who knows? There might be in the future, but right now, no other company has come close to these kinds of gains year after year with projections of these gains into the future. And some of you in the comments from time to time, like, Randy, you're such a big bull, and you're just speculating, and how can you know? Well, you look at history and you see that Tesla has been doing what they said they were going to do. They said in 2014 that they would hit 500,000 cars in 2020. They hit 500,000 cars in 2020. They said in 2019 that from 2020 on, we will attempt to grow. Our goal will be to grow 50% per year average over those years, year after year. And quite frankly, I'm not sure whether that really just meant automotive, but certainly you could look at it as just automotive, or you could say the whole company. With energy growing as fast as it is right now, I think it will be hard for Tesla to ever grow totally as a total entity at less than 50% per year in revenues and substantially more than that in profits. So, and that doesn't count things like robots and insurance and all the rest of the things that are sitting in the sidelines. So the claim that I've been making now for a couple of weeks, and I think the claim has become more true as a result of Moody's decision, is that for those individuals who are looking for a storehouse, a place to put their money right now, when there's a huge amount of risk-off mentality, they're putting them into things like Costco, Apple, Microsoft, companies that have these amazing track records over many, many, many years, as well as good balance sheets. Well, guess what? Tesla has one of the best balance sheets, period. I tried to do the research. Maybe one of you can help me. I researched it 15 different ways. It is so hard to find anybody that's giving a list of who has the best net cash position of companies in the world or in the United States. You can find who's got the most cash, and they give a nice list, and you can find another list that shows some of the companies that have bad debt situations. but I couldn't find anything that netted it out and gave me a nice list. What I can tell you is that just by poking around and looking at them, for instance, Apple has less than 100 billion now in net cash. Some of the other companies that you might be surprised at have $20,000, $15,000, $10,000, $10 billion, I'm sorry, in net cash. Well, Tesla has $20 billion in net cash, at least as of the end of the fourth quarter. Last time they reported, they have about 22 billion in cash and cash equivalents and $1.5 billion in long-term debt. We're assuming that they're keeping that long-term debt because it's just such a good deal. It must be a very low interest rate. So, because otherwise they had been paying off debt right along. So that balance sheet would be right up there. Probably, I'm going to guess if we could really get the list, it's probably among the top 20 companies in the world in terms of net cash. I'd love to see in the comments below if somebody can check me on that and find out, are there 20 companies, 30 companies? How many companies in the world have more than $20 billion net cash on their balance sheet? By the way, Tesla could have more than that by now because they're throwing off about $8.5 billion last year in free cash flow. That's after building factory after factory after factory, increasing the capabilities of one factory after another, adding all kinds of new tools, all the kinds of things that they're doing that require capital. After all of that capital that has been accounted for, they still threw off $8.5 billion in free cash flow last year. So there is no other company like Tesla. There's no company that comes close. So it could be that this little tweak could result in some fairly substantial decision-making changes within the investing public as to how they see Tesla over time, because really it is maybe the best storehouse of value on the market today. And if you combine what a great storehouse of value, in other words, it's less risky than the vast majority of the S&P, less risky than the vast majority of the Dow, less risky than the vast majority of the NASDAQ. Vast majority, it's one of the least risky stocks in the world in terms of the amount of cash they have on their books compared to debt and the amount of free cash flow that they're throwing off. Very low risk. And yet, what do we all look for in the stock? Very high potential reward for Tesla. No other company in history, I just said it a minute ago, I'll repeat it again. No other company this size has ever grown this fast in terms of either revenues or profits. Now, we might have an exception this last year in Aramco, who threw off 220 billion or something in profits, which was a lot more than they threw off the last year. But there would be your one exception. But Aramco is not claiming. Believe me, Aramco is not saying, oh, next year we're going to throw off 330 billion in profits or more than a 50% increase over what they did this year. So this could, again, what you're looking for is a narrative. This is a story stock. Every stock is a story stock, but Tesla in particular is a story stock. There is a narrative. The narrative was grow, 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 and someday you'll get your return. Now the narrative is grow, 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 grow. You're already got a return. But the narrative became, oh, maybe in this horrible economic situation, Tesla will be just like any other automotive company, and they'll start losing revenue. They'll start showing losses. But here we are at the end of the first quarter, and it looks like Tesla is going to be up. First quarter sales, first quarter revenues compared to fourth quarter revenues will be up for the first time ever that may not be ever, certainly for the last several years, maybe ever that they are up first quarter versus fourth quarter, clearly way up first quarter versus last year first quarter, so year over year, and headed toward their, their bottom number, 1.8 million vehicles this year, which would put them on that pathway to 50% per year. So blasting out the numbers in China, blasting out all the other competition in Europe, and continuing to completely sell out the factories in the United States. what else could a person want in a stock? It's kind of hard to figure out what somebody would want that Tesla doesn't deliver. Hey, been great talking to you.